What's up, traders? Todd here. Some of you may think I'm a perma-bull. I'm not. We're actually looking for the market to pull back here a little bit. I'll show you where we're seeing this correction is unfolding, how we're handling it. We're hedging a little bit in the options market. We're seeing a rotation into value, which is very typical for the market when there isn't really a whole bunch going on the data front. Well, that changes here at the end of this week, and then specifically the last 2 weeks of July. We'll talk about that, show you that rotation. I'll show you a key value stock that is kind of trading like a growth stock here. So I'm going to try to do a lot in the next 6 minutes. Think we can do it? All right, so last time I spoke with you on the free video here, I told you we were looking for a pullback in the NASDAQ. This is the NDX 100 on the daily chart in green 4. Well, we've started to get the pullback. This was a pretty easy to see zone of resistance up here in the NASDAQ, just above 15,000. I was looking for a green 4 pullback here around 14,500. Well, that's changed. Here's the updated count. Not that much has changed, except the pullback that we're seeing here is still a wave 4, but what we've done is made it one smaller degree. The pullback is actually, we think, is going to be a little bit more shallow, both in price and time, than what we thought. So the expected support labeled right here, 14,729 to 250, before we move back up to complete that green 3, which is a minor degree 3. Then we go back in 4, and then we should be all set to make new highs. So we did put a hedge on. You know, I'm carrying a lot of long stock, and we have probably about 20-ish positions on our stock swing desk with our members, and I carry a lot of long stock by myself that I don't want to pay taxes on with those profits. So what do? We hedged. So here's the hedge that I put on right here. Okay, so we put a butterfly on. Okay, and I'll talk quickly about that. It's centered around 14,400 in the NDX on July 6th. All right, so if we go up here to analyze, okay, here's the butterfly that I put on, and I'll flip it back to the NASDAQ and show you why we selected this this strike. So here's the actual butterfly. So I'm short 4 of the July 6th 14,400 puts. I'm long 2 of 14,600 and long 2 of 14,250, which becomes a broken wing butterfly. Okay, we have max loss of $3,560, and I'm looking at this teal number here. Max loss at $3,560. If we can get down to 14,400 expiration, which is the first week of July, that gain is around $36,000. So near around there, 25, 26, 28,000, around the 14.4. And if the market implodes, we have a $6,440 profit. So why were we trying to get down to 14.4? Well, that was the wave 4. There's a lot of 4s in there. Support zone. All right, so as I pop this out here, stretch you out just a touch. So 14.4 is going to be right about there, just in the middle of that wave 4 support zone. So this is the 4v2, 4v3, FSZ, which is the Fibonacci support zone. Okay, so that's what we're looking to do there. Now, some people quickly may ask, why would you do all this crazy stuff with a butterfly? Well, it's just a wave 4. Okay, and typically wave 4 sort of meander and are sideways. So I was trying to pick the price at which I think it's going to stop, rather than just an all-out implosion. And what you pick up with that by doing a butterfly, I'm risking $3,500 to potentially make $36,000. Where if you did just a straight spread, let's say you did the 14,600. Long put and then short 14,400. Your max potential loss right now, I just pricing this up as $5,000. The most you can make is $15,000, so 3 to 1. So you get a much better reward to risk ratio with butterflies. Okay. All right. So as I said, we have a ton of data coming up. We have PCE Friday, so personal consumption expenditure, headline and core, which the Fed's going to love. We have housing data here tomorrow and into Thursday. We have CPI coming out in the second week of July, which also starts Q2 earnings. And then at the end of July, we have the July Fed meeting, which is going to be huge. So typically what happens when you do have sort of a lack of data, you get a rotation into value. And that's kind of what we're seeing here. Okay, so you guys have seen this chart a bunch of times. I love this chart. I think it's one of the most important charts in the market. But what we're looking at here in the black ratio, going back from 2021, 22, is going to be value growth ratio. So as this chart is moving up, value is outpacing growth. What is tracking value growth ratio higher? Yields. As the inflation explosion was happening, yields are moving up, driving the value growth ratio. Well, what I'm seeing here is a little bit of a double bounce here in the value growth ratio as the yield, the 10-year yield, is bumping up against resistance around 3.738. Flip it over here onto the RRG on the weekly, you could see that the value trade is clearly rotating in as growth is rotating out. And again, I think the market's taking a breather as we head into some really key economic reports. And specifically, these are your sector spiders on the daily. Consumer discretionary rotating out, technology here rotating out, comm services rotating out, and what's rotating in? All the value stuff. Consumer staples, which is one stock I'm going to show you, healthcare, we have materials doing okay, industrials doing okay. So we have a little bit of a value rotation in. The good news is the 10-year yield, as I showed you in the last chart, is not breaking to new highs. And there's actually a really interesting development between expected inflation and the 10-year yield and also the 2-year yield. I'll cover that on a future video. Okay, so what I like here is I do like one stock in the consumer staples, which is kind of trading like the new monster beverage. Celsius, CELH. My wife's got a refrigerator full of it. So we have the trade on in our stock swing desk, and this is the actual position I'm showing you in the of it. So I'm long. We've been in and out of the stock. I'm long from, the original entry was right around 103 with our clients. We carry a $250,000 portfolio of real stock trades. For our clients. So we're long from here. We added to it. We took some profits into 125. And let me show you where I think we're headed now. So here was the original entry right here. We broke up against those highs here. And I'm thinking we may be in a little bit of a wave 4 here. And then we could have room to move up in blue 5 to complete higher degree 1. At that point, we might have a bigger correction. Okay, so there is still room to go, I think, on this guy, and especially as you're seeing the value trade rotate in, that could give this guy a little bit more boost that he needs. So hopefully that helps, guys. Check us out at tradinganalysis.com. A quick little fun message. Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.